We have with us SBI Chairman Mr. C.S. Setty to talk about Indian economy, banking sector and SBI in particular. Welcome Mr. Setty. Congratulations first of all. SBI has hit a milestone of 100 trillion total business and 100 billion market cap. What is the roadmap ahead and where do you see, what are the milestones that SBI eyes in medium term?
These are very important milestones, of course. I never get tired of saying that 100 billion market capitalization is an important milestone for us. In 2018, for the first time when SBI posted losses, we had a conference of the senior management in Kolkata. And the theme of that conference was, how do you make SBI a $100 billion company? That is, I think, is the leadership vision in terms of progressing towards this milestone. And I'm very glad that we could achieve that important milestone. And in terms of the business, with this 100 trillion mark, business levels is a combination of deposits and loans. Together we call it business, right? So I think 100 trillion, more than 100 trillion, I would like to say 100 lakh crore. I think that sounds good in terms of the Indian context. So these are important milestones, yes. As far as business levels is concerned, we normally have 10 to 12% growth rate in this. So these milestones will be crossed as every month. Market capitalization is a function of how the shareholders look at us, investors look at us. And what we would like to provide is a consistent performance, which I mentioned right in the first interview what I had with you, Dipankar, in terms of consistency of performance is something what we would be looking at. And all elements are in place in my view to achieve that consistency.
Sir, if you could, for the investor, if you could outline some of the milestones that you would have in your mind.
As I mentioned, I think in terms of business levels, every quarter we will have that addition to the business level. In terms of market capitalization, we have an internal aspiration, though it may sound audacious, is that how do we make it to the top 10 global banks in terms of market capitalization. Today we are maybe around 29th, 30th rank. So I believe that for a bank like ours, while we definitely focus in terms of the customer centricity, acquiring the new customers, keep serving the underserved, the market capitalization will be a clear indicator that all the stakeholders are happy with us, correct? And today I think at least 3 banks from India have the capacity to be in the top 10 going forward. So SBI would like to be one of them.
Inflation has touched a record low and growth has also picked up. Taking these into consideration, what is the expectation from RBI and what is your outlook on interest rate?
Inflation, of course, has been historically, I mean, in the recent times, we haven't seen that kind of softer inflation rates. Coupled with the good growth rates, in fact, our internal house view is that the Q2 would be around 7.5, which means that the exit GDP rate for the current financial year would be around 7. So, while rate cut in the December is a close call from a RBI perspective, because the low inflation everybody will ask for some kind of rate cut coming up. But the higher growth rate, also poses some sort of communication challenge for the RBI. So when the higher growth rate is there, how is that rate cut is undertaken? But the softer inflation indicates that there is a room for rate cut.
Despite falling interest rate, you have kept your NIM at 3%. If the rate cut happens in December, do you see a pressure on your NIM? Do you see it revising downward, or you will maintain a 3% target?
Our house view is that, first of all, December rate cut, as I mentioned, is a close call. Before these inflation numbers were announced, and our house call was that there not going to be any rate cut till February. Okay, and if it is upfronted, if it were February, I don't think there would have been any impact on the margins. It's just about a month, or month and a fortnight would have not made any major impact. But if December rate cut is there, but our house view again is that it would be a shallow rate cut of a 25 basis point. So it may not have any significant impact on the margins. There are a lot of levers available to us in terms of, the full benefit of CRR cut will be available by 30th November. That means you have at least 4 months of additional CRR benefit which is coming in. Number two, the repricing of fixed deposits, which normally takes 12 to 16 months, is this quarter also a lot of repricing will happen. So the repricing of fixed deposit and the benefit of the savings bank, rate moderation, what we have done, the CRR benefit, all these things are likely to help us in terms of moderating the cost of resources. If you've seen our Q2 numbers, we have managed our liabilities very well. In fact, the NIM upgrade what you have seen in Q2 is essentially came from the resource moderation, resource cost moderation, both on the deposit side as well as market borrowing side. On the asset side, we have a comfortable position because our repo linked loans are just about 30%. So while we have to immediately pass on that benefit if there is a rate cut, the other book is not immediately repriced. So we get so many levers are available, and I'm reiterating what I said earlier also, that my exit NIM for Q4 would be above 3.
So you are hopeful of maintaining
3%.
But in terms of credit growth, since there is a pickup in economic activity because of fiscal push as well as monetary side stimulus, do you see the need of upscaling your credit growth numbers?
Yeah, we did given a increased guidance on the credit growth. We earlier had been telling about 12%. We have revised it to 12 to 14%. We see a robust credit growth, particularly from the RAM segment, retail, agriculture and MSME. MSME is almost growing at 17 to 18%. Agriculture and retail is around 14%. So corporate, which was lagging for quite some time, we turned around in Q2. We made around 7% growth rate. Our guidance on the corporate credit would be the lower double digit, which means that overall 12 to 14% credit growth rate seems to be achievable.
Okay. So corporate, you said lower double digit?
Around 10%.
Okay.
Yeah.
So what sort of pipeline is available as far as corporate credit demand is concerned?
Pipeline is strong. We have in aggregate about 7 trillion worth pipeline, both a combination of working capital which is not utilized and term loans under disbursement, and also project loans which are under discussion. So in the order of waterfall, any improved economic activity will make working capital utilization better. We are seeing that. May not be year on year, but if you see the quarter to quarter, we are seeing improvement in the working capital utilization. Term loan disbursements, the ones which are already approved and under disbursement, we have clear visibility. What are those term loans which are going to be drawn? And the third category, where the projects under discussion, will create that replacement pipeline. So in all, around 7 trillion is our pipeline, as I mentioned.
And as far as the RAM is concerned, sir, where do you see the the momentum towards, because this is again busy season for.
So we are continuously witnessing good growth on the SME side, and on the retail personal side, the home loans are going robust growth, almost 14%, 14 to 14.5% growth rate is there. Even in this quarter also we are witnessing that. And in case of gold loans, of course, there's a good amount of gold loan growth. We desired that Express Credit, which is our unsecured personal loan, will have double-digit growth. While we have some growth rate coming back in the Express Credit, I believe some of these unsecured personal loan segment has moved to gold loan, and we see that even the same cohort of customers, a few of them, who are otherwise would have been eligible for this unsecured personal loan, they also seem to be accessing the gold loan. So, which makes sense, right? You have gold to monetize, and then you have good amount of loan available now, and the rate of interest is significantly lower than Express Credit or personal loan. But we are seeing good growth across the personal segment, whether it is a pension loan, whether it is a educational loan, whether it is educational loan is seasonal, of course. We have had a good growth rate in there, and home loans, as I mentioned, are also good.
Gold loan is providing you good margin.
Now, gold is more capital efficient product. It's not high ROA product. We don't charge as much as NBFCs do. Our ticket size is also fairly large. So the customer segment is different.
Sir, you have already built up a corpus for maintaining this kind of growth. 25,000 crore you have raised through QIP. Do you see further requirement to go to the market, or you are okay with this?
No, we are very comfortable. In fact, this 25,000, even before this QIP is raised, our ability to fund the credit growth has never been a problem. We wanted to strengthen the capital ratios, so we have done that. Our long-term strategy is that to maintain CRAR at 15% and CET1 at 12%. So if you consider the Q2 profit, which we don't consider every quarter, we do only at the end of the year, right? So even now, as we speak, if you add the profit back, we are around 15.6% on the CRAR side. So, and we would like to maintain at 15 and 12% on the CRAR and CET1. And this kind of CRAR gives us an ability to fund almost 12 trillion credit growth. Whereas even at 12 to 14%, we are talking about maybe around 6.
So you have
we have adequate capital buffers to support the credit growth. I don't think we will be accessing the market anytime soon.
It will sustain you for another 3 years?
I think with the profit rate what we have today, if that same profitability is maintained for another 5 to 6 years, we may not require any capital raising, at least on the CET1 part. Tier 2, we do from periodically to replace what is maturing. This year, we will be raising another 12,500 crores in the Tier 2 bonds.
Sir, RBI has opened, permitted domestic banks to provide funding for merger and acquisition activity. Now, what is the roadmap? What is the roadmap ahead? And how banks are trying to tap this particular market? What is the size of this particular market do you see?
No, this M&A, more than size, more than opportunity, I think is a great confidence in the Indian banking system by the regulator that for almost 2.5 decades, we were not allowed to do merger and acquisition financing. This acknowledges that the Indian banks are matured enough to undertake this activity. But our approach would be that a calibrated approach. It's not that, there are so many regulatory enablers. Not necessary you do every business in an aggressive manner. So we will have a board-defined risk appetite and board-defined M&A policy within the mandated regulatory guidelines. But our view in M&A would be that it would be more risk-focused, and we will do the transactions which we do understand, and and also more collaborative in nature. I think this is something what I mentioned earlier also. There are banks which have been in the M&A financing, MNC Bank for instance. So we would definitely be collaborating with them. And similarly, we have had experience of funding outbound acquisitions earlier also through our foreign offices. So with this combination of our own expertise and our willingness to collaborate, I think should provide some good platform for us. But as I mentioned, it would be purely based on what is our risk appetite for a particular transaction, and do we understand the transaction better, and what is, it would be a calibrated approach.
So you won't be rushing in terms of...
Yeah. No business we rushed in our view. I think we have been very stable in our approach. For instance, home loans. Home loans, we just crossed 9 trillion. Home loans and home related in this month. But it took several years. In 2016, we started in a big way, maybe 2014, 16. And we took almost a decade to build this book. And with one of the best asset quality parameters. So I fully agree with you that it would be not rushing through any of these activities.
Sir, any proposal on your table as far as M&A?
No, I think it's too early to speak about. I think first of all we need to wait for the final guidelines, and we need to have our board approved policies and standard operating procedures. So all these things need to be worked on.
Since you are IBA chairman, from that perspective, I wanted to understand at the IBA level also you are looking at this particular issue, M&A funding?
No, IBA did recommend, in the sense that, various platforms, IBA has been voicing that Indian banks should be permitted to undertake this M&A activity. But it is for the individual bank boards to take a call whether they want to have this product, they want to participate in this, at what kind of transaction they want to do, what is their risk appetite. They have to define themselves.
Because you are a big brother, so everyone would try and...
Not necessarily. I think everybody is empowered to take an action on this.
Fair enough, sir. Sir, there is a lot of talks going on about the big banks, and the finance minister has also alluded to this recently. And we are moving in a direction where we are looking at becoming a developed nation. In that respect, how SBI is looking at this particular this idea, and how do you want to scale it? How do you want to scale yourself? Are you also trying to grow yourself inorganically, organically? What is the idea?
Now, first of all, I think we must understand that merger is a government call. What do they want to do? How do they want to proceed? They need to take a call on that. And as I mentioned in various forums, the first set of consolidation what we witnessed has been value accretive. The scale has helped these banks to be efficient technologically and invest in technology, right technology, digitalization. I think it really got been very beneficial to these banks. So I continue to hold that view, and the current discussion about the consolidation is not new. Even at that time also, it was thought that there will be a second level of consolidation. The timing, how they want to proceed is a purely government call. As far as SBI is concerned, our internal approach is to grow organically. I think we have a scale where we can, technology, customer centricity. These are the areas which we'll be focusing and grow to a size which is globally recognized.
But in past, you did a round of consolidation by absorbing all your subsidiaries. Are you open to the idea of if any good proposal comes to you?
No, as I mentioned, our approach would be to focus on the organic growth.
Since you talked about technology, I wanted to understand with regard to YONO 2.0, which is being talked about. Uh, what is update on that, and what is the game change? Would it be a game changer sort of?
So the YONO 2.0 we would be launching during December of this year, commercial launch. Internally, we have had almost 100,000 people using the YONO now, mostly staff members. So we would be having a commercial launch available to the customers from 15th December, unless of course if there is any major technology issues. So YONO 2.0 or new YONO, what we are calling, need to be looked from two lenses. One is customer lens, and number two is bank lens. Customer lens is not merely the journeys alone. I think you will find everything what YONO had, but in a better manner. The way you interface, interact, that is something what the customer will definitely feel. So we will have on the day of launch a parity with YONO 1.0 and a plus. Some new features will be added. We have a runway of maybe 6 to 8 months where full-fledged YONO features will be rolled out. But on the day of launch, it would be an improved version of what currently we have. That's from the customer point of view. From a bank point of view, we want to anchor the whole digitalization around YONO. And I did mention earlier on your channel also is that we are not looking at YONO as a mobile application alone. We have written a common code for internet banking. We have very significant internet banking users. These are the people who use mobile, who use online banking on the desktop, on the laptops and computers. And this is a very large customer base there. Some of them have moved to mobile banking also. They use both the channels. Some of them have not moved at all. So we are having a common code for journeys, whether account opening, transaction, in the internet banking, that is online banking, and mobile banking, and branch. You will have same experience. It is very useful from the bank point of view. If I want to launch any product, new process, it is one single journey which will be available across the channels. Otherwise, currently what is happening is that I launch on YONO first and then I see how it is behaving. Then I'll make it available on the internet banking. If it has got potential, I'll go to the branch portal. Today, with this new version, we have all the three channels integrated in terms of the backend technology. The second important thing what we are trying to do with YONO is the scaling up. Today we almost have 10 crore customer base there, and our objective is to bring 20 crore customer to the YONO mobile banking or YONO internet banking. Together about 20 crore customer base is something what we are building for, which means that you have to invest in your infrastructure in a significant manner. High availability has to be ensured even despite having such a large customer base. So our idea is that in next 2 years, we should have at least 20 crore customer base in this.
What sort of leverage SBI wants to take as far as AI and machine learning is concerned in terms of pushing its business growth?
So we've been using predictive analytics for quite some time. It's almost a decade that the AI ML models have been introduced in SBI. We have had a very good product called pre-approved personal loan, which is built on the AI ML modeling. And today, the digital loan disbursed through these AI ML models and digitally disbursed is in aggregate about 1.8 lakh crore loans. 1.8 lakh crores. Maybe the outstanding would be around 35,000 crores now. So, AI has been very widely used within the bank for business purpose, and today you mentioned about digital frauds. The largest deployment of AI ML models are in the preventive risk management, proactive risk management tools, PRM tools, what we call. Almost 50 to 60% of the transaction within SBI go through these PRM models on a real-time basis. That means even as you transact, your transaction will be viewed by our PRM cell, whether it is any fraudulent website you are dealing with or fraudulent number you are transferring to, those kind of monitoring happens. So we would like to deploy artificial intelligence in the Gen AI and agentic AI going forward, starting with the fraud risk management extensively, and also for the business purpose in terms of developing the hyper-personalization offerings. We are also introducing a marketing technology now, MarTech, which will be integrated with YONO. And this MarTech also will be using the AI layer, particularly the agentic AI layer, to give the offerings as well as ability to make the customer to fulfill the journey, whatever they undertake. So our approach towards AI is that efficiency gains, productivity gains, and risk management.
As far as monetization of subsidiary is concerned, you have announced one subsidiary which is SBI mutual fund for listing. What is the road ahead for SBI subsidiary monetization, and how do you see this momentum going forward?
So the boards of the shareholders like SBI and Amundi and the board of mutual fund has approved a timeline of 12 months. So if we can't complete in 12 months, we have to go back to the boards. But we are very seriously working that in this timeline, we should hit the market. We haven't had any defined timelines yet. We have started the process of identifying the merchant bankers and other service providers, and we'll keep you informed.
Sir, thank you for giving interview to PTI Video. We appreciate your time. Thank you so much.